हेलो एंड वेलकम एवरीवन, दिस इज प्रोफेसर सिद्धार्थ सुराना। आई होप यू गाइस आर डूइंग गुड और मैं तो हमेशा मस्ती रहता हूं। वेलकम टू लेक्चर नंबर 1, पार्ट 1 ऑफ रिवीजन कम अमेंडमेंट लेक्चर्स एप्लीकेबल फॉर May 24 and November 24 attempt in CA Inter and Final for your subject Direct Tax. How we will be going about these lectures, I had already announced by way of another video a few days ago on YouTube about the fact that very quickly I'll tell you that we will be doing this from the handwritten book of CA Final. You should preferably and advisedly be having the hard copy of the book, but at least the soft copy so that you understand. Common set of lectures will be for Inter and Final. At the end of every lecture, I will be saying, so in today's lecture, we have completed the following chapters, which include the following content of CA Inter. Major delivery language is going to be in English. Very few Hindi words are going to be used while conducting these lectures. And here we are going to now start with the very first chapter. Whenever we start a CA final batch, in the very first chapter, that is in our introduction chapter itself, we start with tax rates. So very first chapter of CA final, tax rates, and obviously and automatically also relevant for CA intermediate students. Huge changes have taken place as far as the new taxation regime applicability and its rates are concerned. We'll discuss that in detail, but the lectures are revision and amendment. So we are going to discuss the other stuff also, and of course the amendments will be discussed properly. So ladies and gentlemen, income tax is payable by individual, HUF, firm including LLP, company, AOP, BOI, local authority and artificial juridical person, and the following are going to be the tax rates for the previous year 23-24. So as you are aware, for your May 24 as well as November 24, it is the same assessment year. For May 24 and November 24, the applicable previous year is previous year 23-24 and the applicable assessment year is going to be assessment year 24-25. Following all the rates under the old regime. Because our government now does not want to give too much respect to the old taxation regime, they basically want you to shift to new regime without making it compulsory. Like the burden is on you, the choice is yours. You decide that you want to shift to the new regime. We are not forcing you. You decide that you want to shift to the new regime. So they are not changing the old regime at all, but trying to make the new regime lucrative. And therefore the old regime without any change. For all individuals less than age 60 years, all non-residents irrespective of age, because we are aware that higher basic exemption for senior citizen is available only if it is resident. So non-residents will also fall with residents below 60 years. And in fact, HUF, AOP, BOI and artificial juridical person also have the same rate. So individual up to 60 years, that is 0 to 59, exact 60 will make you senior citizen. Resident senior citizens have a separate category. So non-residents will also come here, and HUF, AOP, BOI, AJP also will come here in the first category. First 2,50,000, absolutely no change. First 2,50,000, 0%, 250 to 5 lakh, 5%, 5 lakh to 10 lakh, 20%, anything excess of 10 lakh will be 30%. You are also aware of how to do it in a shortcut manner. Take total income minus 10 lakh and apply 30% and add 1,12,500, the fixed tax that we get in the first three, the basic exemption and the first two brackets. Then if you are a senior citizen, that is 60 years and above, but less than 80, less than 80 means this category will cover 60 to 79, then you will be considered as a senior citizen, but only and only if you are resident. The category is not senior citizen, the category is resident senior citizen, resident senior citizen. And you can be that resident senior citizen at any time during the previous year. Means you turn 60 on 1st April or 31st March. For the last day also you were senior citizen. Or forget the 31st March, you are a senior citizen on the 1st April of the assessment year, at any time during the year or first day of the assessment. At any time during the year or first day of the assessment year. If you become a senior citizen, then you get the benefit of higher basic exemption limit, but only and only if you are a resident. So first 3 lakh, there will be no tax. After that, it is same. So up to 5 lakh, 5%, up to 10 lakh, 20%, and after 10 lakh, 30%. And the shortcut for doing this, as we are aware, is take your total income, subtract 10 lakh, that is excess over 10 lakh, apply 30% on that excess over 10 lakh, and add 1,10,000. For the first category, you added 1,12,500. For the second category, you will be adding 1,10,000. That's your second category. And finally, Resident individual who are 80 years and above, we call them super senior or very senior citizen. Exact 80 will come here. So it is 0 to 59, 60 to 79 and 80 and above. Exact 60, exact 80 will entitle you for the tax benefit. But once again, only and only and only if you are a resident. The benefit will be given only and only if you are a resident. You can touch 80. You don't have to cross 80. You don't have to cross 60 or 80. You have to touch 60. You have to touch 80 at any time during the year, or once again 1st April of the assessment year. Means you are 80 years on 31st March of the previous year or the next day 1st April of the assessment year, still we will call you a super senior citizen provided you are a resident. So first category is individual 0 to 59 years, all assessees, non-resident irrespective of age, HUF, AOP, BOI, AJP. Second is resident 60 to 79. Third is resident 80 and above, and this 60 or 80 you don't have to cross, you have to touch, equal to is covered, and this you can touch at any time during the year or also the 1st April of the assessment year. For a super senior citizen, if he falls in this category, that is a resident super senior citizen, first 5 lakh that will be taxed. 5 lakh is the basic exemption, but thereafter it is same. So 5 lakh to 10 lakh it is 20 like anybody else, and after 10 lakh it is 30. Effectively and accordingly, for them the shortcut of calculation is take your total income on the calculator, subtract 10 lakh rupees, apply 30%, and on that add 1 lakh rupees. So first category, it is income minus 10 lakh into 30 plus 1 lakh 12,500. Second category is income minus 10 lakh into 30 plus 1 lakh 10,000. And the third category is income minus 1 lakh into 30% plus 1 lakh rupees. The fixed amount of tax up to income level of 10 lakh will be 1 lakh 12,500, 1 lakh 10,000 and 1 lakh respectively for the 3 categories. However, ladies and gentlemen, these are only first of all the normal rates of tax. So as we are aware, there is a chapter called special rates of tax, chapter 12, ranging from section 110 to 115 B, B, J. So that is going to be discussed separately. Of course, we also have stock market capital gain 111A, 112A. We have long-term capital gain 112. We have casual winnings, and we have all other special rates of tax. All that will be discussed in a separate chapter. These slabs, whether the first category slab, whether the second category slab or the third category slab, these slabs are applicable only and only for your normal incomes. Your special income will always be taxable at a special rate. Always be taxable at a special rate. Normal income, normal rate. Special income will be taxable at special rate, which we will not separately. The above tax that you have calculated, whether at normal rate or special rate, is going to be called your basic tax. Your basic tax is going to undergo certain changes. Change number 1, we are going to give you a rebate under section 87A. The rebate will be reduced from your tax liability. So mind you, don't make the mistake. Don't subtract the rebate from your income. It is not an exemption or deduction. They get subtracted from income. Rebate will be subtracted from your tax liability if you fulfill the following 3 conditions. Condition 1, you have to be resident. Look at the face, bro. You think I've ever gone abroad? Resident. बोलना मत दिवाली में दुबई गया रेसिडेंट. अरे वैसे तो मई में पेरिस स्विट्जरलैंड भी गया, वापस जाएगा रे मई में, मेरी मर्जी. चल छोड़ ना, तेरे को क्या करना. Okay, South Indian student, that was off topic discussion. Come back. Resident, individual. A rebate is only for individuals. Companies, firms will not get rebate. And your net taxable total income should be not exceeding 5 lakh. Not exceeding means less than or equal to 5 lakh. Matlab equal to 5 lakh is also eligible. Resident individual income up to 5 lakh. Resident individual income up to 5 lakh. If you fulfill these 3 conditions, so you will get the rebate of your actual tax or 12,500, whichever is lower. So first the condition, resident individual NTTI up to 5 lakh, equal to 5 lakh also covered. Actual tax or 12,500, whichever is lower, is going to be your rebate under the old regime. Till last year in new regime it was same, but this time it has undergone changes. When we go to the new taxation regime, we'll talk about it. But that's the first change. Your basic tax can change. 1, due to rebate. Second, due to surcharge. So do you see? We have kept the photos of both of them on the same page. There is one thing common between me and Mukesh bhai. We both pay HEC at 4%. Arey HEC aayega, pehle surcharge. Surcharge is increase in your tax liability. So rebate is going to reduce your tax liability. Surcharge is going to increase your tax liability. Surcharge is going to be applicable for individual, HUF, AOP, BY, AJP, everyone. In fact, it is also applicable for firms and companies, but that we will learn separately later. Surcharge will apply for individual, HUF, AOP, BY, artificial juridical person. If your net taxable total income is more than 50 lakh up to 1 crore, it will be 10%. More than 1 crore up to 2 crore, it will be 15%. More than 2 crore up to 5 crore, 25%. And more than 5 crore, it will be 37%. And all these rates are going to apply on your basic tax liability. Let's compare surcharge and rebate. Rebate is for resident. Surcharge is for everyone. We have not written. Rebate is only for individual. Surcharge is for these guys. These guys, the rates are same. But company firm also there is surcharge at different rates. We'll learn that later. But it is there. So rebate is only for individual. Surcharge is for everyone. Rebate is only for resident. Surcharge is for all. Rebate is allowed at equal to 5 lakh income level. But surcharge will not come at equal to 50 lakh. Only if it is greater than 50 lakh, we apply 10%. At exact 5 lakh, we do give rebate. But at exact 50 lakh, we do not apply any surcharge. More than 50 lakh, 10%. Then, at exact 1 crore, we will not increase. Once it is more than 1 crore, we make it 15. At exact 2 crore, it will remain 15. More than 2 crore will become 25. At exact 5 crore, it will remain 25. More than 5 crore, it will become 37. And whether 10, 15, 25 or 37, it will all apply on your basic tax liability. So, surcharge ka there are 4 rates. 0% up to 50 lakh, but after 50 lakh, 10% up to 1 crore, then 15% up to 2 crore, 25% up to 5 crore, and 37% after being more than 5 crore. However, this 25 and 37 is very, very high, and accordingly, our government wanted to relax this for certain taxpayers. Please pay attention. This is a little confusing, so please pay attention. Okay, there are some people who earn the following special income. Income under section 111, that is short-term capital gain stock market 15%. Income under section 112, long-term capital gain on stock market, first 1 lakh at 0%, balance at 10%. 112, all other long-term capital gains outside stock market 20% or sometimes 10% without taxation. Dividend income, the income as such does not have a special rate of tax, but dividend also is considered as a special income here. And this last point is applicable only to CA final students, not to CA inter students. Capital gains of FIIs under section 115 AD. Our income tax law is considering these incomes as special income. Sir, what do you mean by special income? They are so special that whenever you calculate tax on them, first of all on income we will calculate basic tax. On basic tax we apply surcharge. Surcharge is not applicable on income. Surcharge is applicable on your basic tax liability. So first you calculate tax on these. And on these incomes, 25% and 37% का surcharge will not be applicable. मतलब my short term capital gain in stock market, whether it is 2 crore, 20 crore or 200 crore, on 200 crore also I will not pay 25 and 37%. First of all, I don't pay on income. I don't want this confusion. First on that 200 crore I will calculate the tax, that is 15%. On that tax, highest I will apply 15%. Then normally if you cross 2 crore then 25 becomes applicable. Now, supposingly my salary income is 200 crores. Then after calculating basic tax, I will have 37% surcharge. But on this tax, the tax of these incomes, we will not have 25 and 37. Highest that we will apply will be 15%. We will not go beyond or more than 15%. Matlab normal surcharge rates are 0% up to 50%. Which is same whether you have these incomes or you don't have this. More than 50 lakh, 10%. With these incomes or without these incomes. More than 1 crore, 15%. With these incomes or without these incomes, 15% will come. Once your total income crosses 1 crore, 15% will come. When you cross 2 crores, first you calculate basic tax. Then you apply surcharge. Those who cross 2 crores, first we try to apply 25% surcharge. But on these incomes, the tax that we have calculated, because surcharge is not on income, it is on tax. On these incomes, the tax that we have calculated, we will not apply 20 or 37. 25 and 37 if applicable will be applicable only on the tax that you have calculated on your other income. Supposingly my salary is 6 crore and my long-term capital gain is 1 crore. तो on 6 crore I will calculate tax as per slabs. On this 1 crore LTCG I will calculate 20%. On this 20% tax I will not apply 25%. I will apply only 15%. On that other tax I can apply 37%. 25% and 37% will not be applicable on the tax that you calculate on these special incomes. This is the easy part. So whatever be my income, whatever be my surcharge otherwise applicable, all 4 surcharges are applicable. But on these incomes, it will not apply. On these incomes, I will not apply 25 and 37. On these incomes, I will stop at 15. I will not apply 25. Now comes the actual confusing part. Supposingly, my total income has crossed 2 crore only because of these incomes. If these incomes were not there, my other income also wouldn't have crossed 2 crore. Matlab say my salary is only 80 lakhs. Then normally if my income is only 80 lakhs, only 10% surcharge will come because it is this range. But I have this dividend income of 4 crores. So my total is becoming 4 crore 80. Now anybody who has got 4 crore 80 income, that means I am falling in this range between 2 and 5. So those who have income of 4 crore 80 lakhs. Normally anybody having income of 4 crore 80 lakh will fall in 25%. But one thing we have understood that this 4 crore ke upar we can't apply 25 or 37. So here to we have to apply maximum 15 on this tax, not on the income but on the tax. But has your other income crossed 2 crore? No, that is only 80 lakhs. So on that also we will not apply 25 and 37. Let me sort this confusing part with the help of some numbers. We will be having 4 special incomes. At intermediate it is 5, or for CA final we can say at intermediate it is 4 special incomes. At CA final we can say 5 special incomes. Which 5? 111A, 112, 112A, dividend and capital gain for FII, which is not applicable to inter, only final. And we will have our other income. Special income plus other income will give us our net taxable total income. Supposingly, I have got 8 crore special incomes and I have got 6 crore other income. So my net taxable total income is 14 crores. So I fall in 37% because here I have to check. This is the amount on the basis of which I will decide. This is the amount, this is the amount, this is the amount on the basis of which I will decide which out of the 4 surcharges is applicable. If my total is 14 crore, therefore ideally my answer is 37%. But of course, we don't levy surcharge on the incomes. First, we will calculate tax on this 8 crore and tax on this 6 crore. If at all we levy surcharge of 37%, we will levy only on my other income. Cut tax on this, we will apply maximum 15%. 25 and 37 will not be applicable on the tax of these incomes. On the tax of these incomes, we will apply maximum 15%. Only and only 15%. Maximum. See, of course, it can be 10 also. If this income was only not exceeding 1 crore, if this income was 80 lakh, then everywhere it will be 10. If this income is 1.5 crore, then it will be 15. The decision that we are right now taking is whether 25 and 37 has to be applicable or not. Whether we have to apply that 25 or 37 or no. So if we apply 37, it will apply only here. Or 25, then it will apply only here. Here it will not be applicable. Here it will be maximum 15%. That's the first part. That's the first part. The first part is very clear, very simple. First part mein they are only saying this much, that 25 and 37. 25 and 37 is not applicable to tax of these incomes. 25 and 37 is not applicable to the tax of these incomes. The second part is a little complicated. The second part says, supposingly, I have crossed, say this special income is still 8 crore. Okay. The special income is still 8 crore and this is 1.5 crore. So accordingly, my total income is still 9.5 crore. When we look at 9.5 crore, what is our first conclusion? Like last time, at 9.5 crore, so 37% is applicable. Because once we cross 5 crore, then 37% is applicable. We also have understood that we first have to calculate tax on both our incomes, because surcharge is not applicable on these income figures. Surcharge is applicable on the tax figures. So chalo, let us calculate tax on 8 crore, special rate, 1.5 crore at normal rate. Now is the time to apply surcharge. In example A, we have also understood that even if I fall in 37, here I cannot apply 25 or 37, here I will apply maximum 15. So in this, so we will apply only 15%. Even if here your answer is 25 or 37, here 25 or 37 will not come, it will only be 15. Now comes the second. Just go and check this amount. Is this amount crossing 2 crores? No. My total is crossing 2. But is this special income, is this normal income ka amount crossing 2 crores? Is my normal income crossing 2 crores? No. So here also we will apply 15. For 25 to apply, this has to be more than 2. This has to be more than 2. For 37 to apply, this has to be more than 5 crore. If this was 2.5 crore, I would have applied 25. If this was 5.5 crore, I would have applied 37. But if this is only 1.5 crore, then here also I will apply only 15. Means here to 25, 37 will never be applicable. Here 25, 37 will never be applicable. If at all it applies only here. Here it was 6 crore, so we applied 37. Here it is only 1.5 crore, so we applied only 15. But 15 will come, 15 will come. Because the discussion is whether 25 or 37 is not applicable. One mistake which some students can make. Supposingly this is 8 crores. Special income. And this is 40 lakhs. So your total is 8.4 crore. So what mistake you as a student can? You will be calculating tax here. You will be calculating tax here. On both these tax amounts, you will apply surcharge. Here, so by now you know that we can apply maximum 15. It can't be more than 15. Highest will be 15. The student that makes mistake here thinks that, sir, this is 40 lakhs, not crossing 50. So make it 0. Or maybe if it was 60 lakhs, so sir, make it 10. No, sir, this is one mistake that you should avoid. This is possibly the only mistake that you can make. This will be also 50. Sir, my total income crosses 1 crore. Then 15 is applicable on both. All the discussion that we are doing here is whether 25 will apply or no. Whether 25 or 37 will apply. Yes, because this has crossed 5 crore, we are applying 37. Whether 25 or 37 will apply. No, sir, this has not crossed 2 crore, so it will be only 50. Whether 25 and 37 apply. Sir, this has not crossed 2 crore. So 25 won't apply, but 15 will apply. 15 is already applicable. 15 is applicable the moment this has crossed 1 crore. The discussion is on 25, 37 applicable or not applicable. Here it will never be applicable. Here 25, 37 will never be applicable. Highest will be 50. So if at all 25 or 37 has to apply, it has to apply only on the normal income, the right side. Here applicable because this crossed 5 crore. Here not applicable because they did not cross 2 crore. Here not applicable because it did not cross 2 crore. But 15 will come. 15 will come. 15 will come. Sir, why? Sir, because total has crossed 1 crore. Just remember one line. We here are discussing whether we have to apply 25 or 37 or not. Only that much. Sir, 15 is already applicable. It can't be 0, it can't be 10. 15 has already become applicable. Hello. I hope after this no confusion remains. And by the way, even if there is some confusion after this also, you can comment some example or some difficulty that you are getting on the YouTube video. As told in the announcement, only this first lecture will be available on YouTube. After this, all lectures will be available only and only in the SS Pro Educare app. You have all the reasons to dislike me. You have all the reasons to not follow me, but my lectures are going to be very, very useful. Follow my lectures, and my lectures will be available only and only on SS Pro Educare app, no other portal, platform or website. So you can download the app on Windows, iOS or your Android devices, go to the free courses tab. If you are using a mobile phone to access the app, so at the top of the free courses, you'll get the course name. You have to just swipe and scroll. You'll get all the free courses. So all MCQ solutions of inter and final have been uploaded. CA inter full lectures have been uploaded, and these subsequent parts, part 2 onwards, all revision and amendment lectures also are going to be uploaded only and only on the app. So that was your complicated surcharge part. Next part, if an AOP has only company members, the highest surcharge will be 15, because in any case we know that companies normally also we don't charge such high rate of surcharge. Highest surcharge for companies is 12% for domestic and 5% for non-domestic. Against whatever surcharge is applicable on you, we are going to be allowing something called marginal relief, with an example that when your income is 1 crore, you have 10% surcharge. But when your income is greater than 1 crore by marginal, you only 5,000 rupees, then we have 15% surcharge. First, we calculate basic tax on 1 crore using the slabs that we have studied above. On 1 crore, you will get 28 lakh 12,500, and 1 crore 5,000, you will get 28 lakh 14,000. Obviously 1,500 more, 1,500 more, because income has increased by rupees 5,000. This 5,000 obviously is taxable at 30%, which is the difference of 1,500. But here comes the big difference. Your surcharge will be 10% because the income is exact 1 crore, and your surcharge will be 15% because the income is exceeding 1 crore. Consequence of which, here the tax is coming as 30,93,750, and here it is coming as 32,36,100. This fellow has only earned 5,000 more than the first guy, but his tax has increased by 1,42,350. This is stupidity of the highest level. You cannot increase somebody's tax by 1,42,350 rupees, where that person has earned only extra income of 5,000, or let me put it in words, my 5,000 extra income is bringing 1,42,350 extra tax. That is highly unfair, and therefore the difference will be maximum 5,000. In one line, the concept of marginal relief, write it somewhere if you want. The difference in tax cannot exceed the difference in income. I repeat, the difference in tax cannot exceed the difference in income, and that's your concept of marginal relief in one simple line. And therefore we will restrict this difference to only 5,000. This has to be only 30,98,750. So the extra tax that has come in this we will subtract, and that is called marginal relief. After giving this, finally HEC, health and education cess, is always going to be applicable. One, it will always apply, no condition. For rebate there are 3 conditions: resident individual income up to 5 lakh. For surcharge there is though only one condition, that income should exceed the threshold of 50 lakh. HEC there is no condition, it will always. When will HEC come? Ka answer is what? When will HEC come? What's the answer to that question? Always. At what rate? 4% across the income tax law. Please don't go and tell this to auntie, that auntie. HEC is very simple. It is same for everyone always. So let's complicate it, because she is the one who complicated surcharge. She is the one who has complicated rebate in the new taxation regime. If at all there is anything which is not yet complicated, which is same for everyone, irrespective of nature of assessee, irrespective of old or new regime, whether minimum alternate tax or normal tax calculation, HEC universally applicable is 4% to everyone. Don't tell this to auntie, otherwise she will make company 5%, individual up to 50 lakh 2%, more than 50 lakh 5%. She can do anything. Please don't tell her this. Okay, so 4% of what? Of the basic tax that you calculate. Subtract rebate if applicable. Add surcharge if applicable. Of course, the two cannot always coexist, can never coexist. Only one of them will apply. Either you will be a rebate case or you will be a surcharge case. It can be none of them for those having income between 5 lakh and 50 lakh, but it can never be a case of both of them. It can never be a case of both of them. Okay, so health and education side has to be at 4%. That was the tax calculation as per the old regime. Now let us discuss the new taxation regime. You are being given an option. Okay, for those who don't know this guy, you should go to Amazon Prime and watch a web series called Mirzapur. It's a treat to the ears, I'm telling you. Okay, such innovative bad words you must have never heard in your life, and it's a Hindi web series. I know all my South Indian students, if I conduct their lectures in Hindi, they'll be uncomfortable. Sir, no sir, English sir, please sir. Sir, can you give me the lectures in English, sir? And same thing when they watch web series, when they watch movies, at that time they understand Hindi absolutely. उस time पे there is no problem at all. चलो no problem. तो you go and watch this guy when exactly this guy said तुमको option दे रहे हैं star. What did he mean? वैसे it is irrelevant. This book is made to keep your mind a little happy, a smile on your face. I love to see a smile on your face, and anything for your smile, my dear students. Okay, so for this reason I have tried to make this. I have tried to the best of my abilities. Huge amount of creativity has gone. If you are really liking this book, then please show me by again commenting that you know I'm sure you are liking it, but unless you tell me, how do I come to it? Okay, so ladies and gentlemen, with effect from assessment year 24-20, huge number of changes have taken place in the new taxation regime. First, we'll talk about 115 BAC. At the outset, till last year, it was applicable only to individual HUF. From here itself, the amendments have started. AOP, BOI, AJP are also now going to fall under 115 BAC. So, 115 BAC will now be available to individual HUF, AOP, BOI, and artificial juridical person. All four assessees will come here. First amendment. Obviously, we all know that 115 BAC is optional. So, assessee can go for old regime or new regime, whichever is beneficial. What are the tax rates? If you observe, all the slabs here have undergone change. Till last year, the slabs where every slab was 250, 250, 250, and the rate was increasing by 5%, 5%, 5%. Auntie, to make this lucrative, to make this attractive, the new taxation regime, what Auntie has done is she has increased the slab value of 250 to 3 lakh, 3 lakh, 3 lakh, 3 lakh, and accordingly, with 5 slabs, one slab altogether got eliminated. The rates here used to be 0, 5, 10, 15, 20, and 25 before 30, but that 25% bracket completely gets now eliminated. So you have to now forget all those who had given the November 23 attempt, mainly they will have to now forget everything that they have studied in new taxation regime. The amendments have already commenced. First amendment itself, AOP, BOI, AJP will also be covered. Second amendment, the rates have completely changed. So now all individual HUF, AOP, BOI, AJP. Yeah, here we are not distinguishing in senior citizen and super senior. This is common. This is for all individual, all HUF, all AOP, BOI, all artificial juridical person. Basic exemption up to 3 lakh, no tax. Next 3 lakhs, 5%. Next 3 lakhs, 10%. Next 3 lakh, 15. Next 3 lakh, 20. And after 15, it is 30. Last year also, after 15, it was 30. But here, the slabs have undergone change. Every slab has become of 3 lakh. And if we calculate tax in these slabs, so that we are able to compare with what happens in the old and new regime. Ladies and gentlemen, for those who have studied the law last year, you all know this, that at 15 lakh income level, in old regime, the tax comes at 260 to 500. You can calculate now also. 5 lakh into 30%, 1 lakh 50, and 1 lakh 50 plus 1 lakh 12,500. That makes it 260 to 500. So if we ever calculate tax as per old regime, so what is the tax liability at 15 lakh rupees? 260 to 500. That's clear. But if your income is 15 lakh as per the new regime, so what will be your tax? We just have to apply these rates on 3 lakh. Let us apply. First 3 lakh, 0 tax. Next 3 lakh, 5%, so 15,000. Next 3 lakh, 10%, so 30,000. Next 3 lakh, 15%, so 45,000. Next 3 lakh, 20%, so 90,000. And of course, anything after 15 is 30%. That was last year also 30. And in old regime, so after 10, anything is 30. So after 15, obviously everything is going to go in 30 only. No, after 10 lakh only 30 applies. So after 15 lakh, so obviously 30 will apply. So that means the fixed tax will come at 15 lakh, 1 lakh 50. How do we calculate tax as per old regime? Total income minus 10 lakh into 30% plus the fixed level of tax, 1 lakh 12,500, 1 lakh 10, 1 lakh. 3 categories: normal, individual, resident, senior citizen, resident, super senior. Good news number 1, here you don't have 3 categories. There is only 1 category. New taxation regime, all individuals without any distinction in senior citizen, all HUF, all AOPBI, all artificial juridical person. In fact, whether you are resident or non-resident, because the section nowhere distinguishes. The other assessees like companies, firms where there is no tax, new tax regime, companies, cooperative society, 115 BAA, BAB, BAD, BAE, they have specifically mentioned it has to be domestic company or resident cooperative society. But here, no. And therefore, this is available to all individual, all HUF, whether resident or non-resident. What will you do? Total income minus 15 lakh into 30%. Because after 15 lakh, everything is 30. Plus 1 lakh 50,000. Matlab at income threshold of 15 lakh. In the old regime, you have 262,500. In the new regime, you have 1 lakh 50. Ladies and gentlemen, the savings of tax will only and only be 1 lakh 12,500. Till last year, this amount used to come to 187,500 and savings used to be 75,000. Now, this amount is coming to 150 and thus the savings are 1 lakh 12,500. That's it. And that day when this budget came, 23 ka budget, when massive changes were made by auntie in the new taxation regime. See, old taxation regime, she now considers it as bad debt written off. She is least interested in the old tax regime. She is not just removing it because she wants you to go in the new taxation regime, but you are responsible for it. If she makes it compulsory, then she will be responsible. So you take new regime and only you are responsible. So there were these 6-7 tweets that I did on that day, and they became a little viral. For any tweet to be viral, no, you actually have to screenshot it and put it on Instagram. No problem. You can like, share, subscribe, follow me on Insta, etc. Okay. At income level of 15 lakh, your tax in old regime is 262,500 and new regime is 1 lakh 50,000. 150 with these numbers. The maximum savings that you will make is 1 lakh 12,500. But the loss due to foregoing of exemptions and deductions is unlimited and cannot be calculated because we all know the number of exemptions and deductions that have to be given up for going to the new taxation are too damn high. Too damn high. It can be crores of rupees. If new taxation regime is beneficial, the maximum benefit it can bring is 1 lakh 12,500. If new taxation regime is prejudicial, the loss cannot even be measured. It is infinite. It can be crores of rupees. It can be anything. Income tax law is giving you two options: old regime, new regime, old regime, new regime. As a chartered accountant, I give my client only one option: old regime. Only two options. You take two options: old regime or poison, old regime or poison, old regime or poison. There is nothing called new regime. Never even think of going to new taxation regime. Don't even come and discuss this point. Don't even discuss this. Okay. We were thinking that auntie will make the law simple. She will either remove old or new, any one regime. All she did was just removed one slab from the new regime. 25% bracket goes. That's it. Otherwise, old regime, new regime is going to stay. So, first amendment, AOP, BY, AJP will be covered. Second amendment, rates have completely changed. So, you have to now learn the new rates. So, the students who have already attended the May 24, November 24 batch, for them it is easy because day one they have learned the new rates only. But students who have given the November 23 exam and unfortunately not cleared are going to find it difficult. They are going to face, a tough time in understanding what is happening because you have to first unlearn what you already know and then you have to relearn this particular thing. All right. Then that was basic tax. And there are plenty of changes, plenty of changes. More amendments. Next, rebate under section 87A. Till last year, this rebate was absolutely same. But now they have changed. Till last year, I used to tell my students, rebate under 87A in old regime and new regime same. But now there is change. What is the change? This condition is same. So old regime, new regime, resident. This is also same. Individual. But this rebate will be allowed if your net taxable total income is up to rupees 7 lakh. So till last year, in new regime also threshold was 5 lakh. Now, old may they are not changing anything. But in new regime, you will be eligible even if your income is up to 7 lakh. Means, supposingly your income is 6 lakh. So in old regime, you won't get rebate. But in new regime, you will get. And that also how much we are enhancing the quantum. So this is an amendment. This is an amendment. Actual tax or 25,000, whichever is lower. Dekho, first of all, apply these slabs on 7 lakh ka income. So you will find out that 7 lakh ka tax is coming to exact 25,000. First 3 lakh 0. Next 3 lakh 15,000. And here only 1 lakh will come 6 lakh to 7 lakh. So we apply 10%. So we'll get 10,000. At 7 lakh, as per new regime, tax liability that will come is 25,000. At 7 lakh, as per new regime, the tax liability is 25,000. And that 25,000 will completely become zero by way of rebate. Resident individual income up to 7 lakh. Resident individual income up to 7 lakh. Actual tax or 25,000, whichever is lower. Matlab, what are the two amendments? Eligibility criteria is increased. 5 lakh income will become 7 lakh. And quantum of rebate is increased. 12,500 will become 25. But these two are only in the new regime. Old regime, everything remains same. So people are like, sir, new regime attractive, sir. In old regime, 5 lakh ka tax is 12,500, it is becoming 0. But in new regime, 7 lakh ka tax 25 is becoming 0. Sir, so if my income is more than 5 lakh, I will get rebate under 87A and new regime ka tax will become 0 up to 7 lakh. Bro, new regime mein deductions are foregone, so income is already higher. Forget about your scientific research, 35 AD, additional depreciation, forget everything. We all know this is a revision come amendment lecture. Huh? Don't take this lecture as a replacement of your first time study. You can't come and say that, sir, I had never studied direct tax before I saw your revision lectures. Can I give the exam? Ek kaan ke niche lafa I will give you. You can't take this as the first time study. This is a revision lecture. So you should know that 80C ka limit is 1,50,000. 80D normal is 25, but senior citizen resident ke liye 50. If you just utilize this 150 and this 50, total 2 lakh, then this income which is 7 lakh in the new regime is 5 lakh in the old regime. Because these deductions are not allowed in the new regime. So already your income is higher. If you were by chance going to the old regime and taking these two, so this 7 will become 5. So there also your tax is becoming 0. In fact, this is only 80C and 80D. Just imagine the other deductions or exemptions that you have to forego. This was one more tweet which I said, if 80C and 80D is fully utilized, it shall make up for the difference between rebate eligibility in old and new. In old it is 5, in new it is 7. Just utilize 80C, 80D, so income anyways will become 5. Other benefits to be foregone are massive. Reminds me of a slogan that we used to shout at Wankhede. Wankhede Stadium is in Mumbai. When we used to go to Wankhede Stadium during our college days, the boys, I got this feeling that, cause I'm losing all control. So we boys used to shout some slogan, Banaya, Bada Maza Aya. Now don't ask, sir, kya banaya? For sophistication purposes, for keeping it normal in classroom. Pagal banaya, Bada Maza. Let's keep it that. But we used to actually shout something else publicly that also. Sometimes I wonder how bad we were, but we still are. Okay, so bro, effectively they are trying to show that new taxation regime is better, but it is not. Further, auntie brings one more point. She says that I will give you marginal relief. Normally marginal relief is available only against surcharge. Only against surcharge. In rebate, you don't get marginal. I'll make you understand how. Supposingly, we are in old regime. Okay. In old regime, if your net taxable total income is 5 lakh, so your tax will become 0 because 12,500 ka tax will come, but rebate will become 0. But if your net taxable total income is 5 lakh and 10 rupees, so your tax will come to 12,502 without any. Means your income ka difference is only 10 rupees. But only because of 10 rupees you have to pay full tax. At 5 lakh you get rebate. No, greater than 5 lakh you don't get. So do you realize only because of 10 rupees such massive tax is coming? There is no marginal relief in rebate. The marginal relief applies only under surcharge. But in new regime, see what? If your NTTI is 7 lakh rupees, is your tax 0? Yes, sir. Right now we saw tax is 25 and that 25 will become 0 because actual tax for 25,000 whichever is lower. But supposingly your net taxable total income is say 7 lakh and 10,000. Now because it is 7 lakh 10,000 you are disqualified from rebate because the rebate eligibility here is only 7 lakh. Because you don't get rebate, you will have to calculate your full tax. So let's calculate full tax. 0 to 3 lakh, no tax. 3 lakh to 6 lakh, 5%, so 15,000. And 6 lakh to this 7 lakh 10,000. We apply 10%, so we get 11,000 in the 10% bracket. The tax is coming to 26,000 rupees. Now here there will be no rebate. See, at 7 lakh you get. So make that 25,000 0. If this was only 10,000 less, so this would have been 10,000. This total would have been 25,000 and full 0 because of rebate. That's this case. But here the income is 7 lakh 10,000 and therefore I will not get it. But here I will get marginal relief. See, old may I am not getting marginal relief. So full 12,502 estimated. Here, what is the difference in income? 10,000. So this difference in tax, if this is 0, so this can be maximum 10,000 and accordingly we will subtract 16,000 by giving you marginal relief. The difference in tax 0 and 10,000 cannot be more than the difference in income. If income ka difference is only 10,000, तो tax का difference cannot be 26,000. It can be maximum 10,000. So we are giving marginal relief also under rebate. In old regime, you get marginal relief only under surcharge. But in new regime, we are giving marginal relief also under rebate. We are enhancing the eligibility to 7 lakh. We are enhancing the rebate quantum to 25,000. If old regime में 5 lakh का tax is becoming zero, तो in new regime 7 lakh का tax is becoming zero. But bro, new regime में income is higher, no. You can make the income only zero, or you take deductions, you will come below the rebate threshold if you are following old regime. I don't even think of going to the new regime. Okay, auntie is trying to make the new regime look attractive without making it attractive. You know these social media jokes. Tell me you are a CA without telling me you are a CA. So we say that whatever I do, I take 4 attempts. I go to the ATM, withdraw money 4 attempts. I try to open my house door with my own keys 4 attempts. I try to start my car in the morning 5 attempts. We are chartered accountants. It does not happen in one go. Tell me you are a CA without telling me you are a CA. Such memes go on social media too. Here, make new regime look attractive without making it attractive. She's fooling you guys. Don't get fooled. Okay. Next, surcharge. Surcharge is absolutely same as old regime. So 10, 15, 25, 37. But again an amendment. 37 will not be applicable. Now 37 will not be applicable. Matlab, surcharge in new regime is only 10, 15 and 25. So till last year, when I used to do new taxation regime, I used to tell students rebate and surcharge same as old. But I can no longer say rebate same, surcharge same, because rebate and surcharge are no longer same. But yes, anybody who goes to the new taxation regime will be immune from applicability of alternate minimum tax is one thing that you should know. And special rates will always apply. देखो, old regime or new regime का decision can be taken only on your normal incomes. Your special incomes will always be taxable at special rate. For normal income, you can take old or new. Your special income will always be taxable at special rate. Next comes an extremely important change. In any examination question which involves tax calculation, be prepared to be tested on. With effect from AY 24-25, 115 BSc shall be the default regime. Means till last year, if you don't decide anything before due date of return filing, you were by default in old. If you want to go, you have to decide on or before due date of return. Now the times have changed. Akshay Kumar. If you don't decide anything, then by default we will put you under new regime. Matlab, if you want old regime, which we all want, I already made you all understand that I will always go in old regime. If you all want old regime, then file your return on time and exercise the option of old regime. If you don't exercise the option of old regime, then by default we will put you under the new taxation regime. Where will this be tested directly in your exam? You can write it down somewhere. Your exam ka question will be calculate tax as per the default regime. That means you have to now calculate as per new. Or if they ask you calculate if the assessee has opted out of the default regime. Opted out matlab you are in old. Till last year by default it was old and you opt for new. Now by default it is new and you opt for old. Is a change. So change number 1, amendments I am telling you. Because these are revision come amendment. Amendment 1, AOP BOI will be covered. Amendment 2, all the slabs have changed. Amendment 3, rebate ka eligibility is up to 7 lakh and rebate quantum is up to 25,000 with also eligible for marginal relief. Next amendment, surcharge of 37 not applicable. Next amendment, again very big. If they ask default regime, that means as per new, and opt out of default regime, matlab old. And of course, you have to opt out on or before due date. This frequency of opting is kept same as last year. If you don't have PGBP, then you can take the option on a year-on-year basis. If you have PGBP, then you can change, exercise the option once and change only once. Thereafter, you cannot change. But if you stop having PGBP, then you can go to the right side. Matlab, in the current scenario, by default, you are in new regime. If you want old, then you opt out. So if you opt out, you'll come in old. For non-PGBP people, you can opt out every year. Every year you can choose old, new, old, new, old, new, old, 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 new, old, new, old. Every year you can. But those who have PGBP, by default they are in new. If you want old, exercise your option. Now you are in old, whether you exercise or no, old. One day you are not comfortable. Well, nahi yaar, I want to go back to new. So no problem. You can change and go back to new, but only once. Thereafter, you will not be allowed to go back to old again. So new to old, you can exercise your option. Not comfortable in old, come back to new. But second time, we will not let you do. Those who don't have PGBP can change every year. Those who have PGBP can go from new to old. Default is new. Now default is new. So we will say go from new to old. Come back from old to new, but not allowed again. Last year it was default is old. So go from old to new, come from new to old. Then second time you are not going to be allowed. So that process is same, but then it is mirror image. So by default in new, go from new to old. Not comfortable, come back to new, but second time you will not be. And now comes the biggest problem of new taxation regime. If anybody desires to go to new taxation regime, you will have to forego the following tax benefits. Then and only then the new taxation regime is going to be available to you. Following exemptions, following deductions will be allowed only in the old regime, not allowed in the new regime. First, 10.5 leave travel allowance, 10.13a house rent allowance. Under 10.14 income from salary, certain exemptions are allowed as per latest study material of ICAI. Salary and house property are removed. But then once there is a question on calculate total income and tax, you can't trust them. They can ask you anything. At CA final, they have removed salary and house property, but they may possibly ask you still. They can do anything. But in inter, anyways, you all should notice that there are certain exemptions under 10.14 which will not be allowed, like children education allowance, children hostel allowance, tribal area allowance will not be allowed. But following are exceptions. These exemptions can be claimed. Transport allowance for a Divyang handicapped employee, we get 3,200 per month maximum. Conveyance allowance for meeting office duties, these are expenses. Allowance to meet cost of tour travel transfer, daily allowance for being away from normal place of duty. These are expenses that you have incurred, and therefore these expenses cut exemption will be allowed, and Divyang employee, handicapped employee ka 3,200 will be allowed. Otherwise, children education allowance, children hostel allowance, etc. will not be allowed. Next, if you are a member of parliament or MLA, you get daily allowance, constituency allowance, which is fully exempt, but that exemption will be available only in the old regime. In new regime, it will be taxable. If you have income of a minor child, that is club, so there is an exemption. Actual amount or 1,500 per annum per child, whichever is lower, but that exemption will not be allowed in the new regime. It will be allowed only in the old regime. SEZ deduction, first qualifying amount, then first 5 years 100%, next 5 years 50%, last 5 years 50%, subject to amount transfer to SEZ reinvestment reserve. Allowed in old regime, not allowed in new regime. Next, now focus. Deduction under 16.2 and 16.3 are deductions for entertainment allowance and professional tax paid. These two will not be allowed. Till last year, here they had written deduction under section 16 not allowed. And now they are saying 16.2 and 16.3 not allowed, which means that standard deduction is now going to be, ladies and gentlemen, allowed against salary income in old as well as new. So till last year, all salary deductions, standard deduction, entertainment allowance, professional tax paid were allowed in old regime, not allowed in new regime. Now, allowed still in old regime, but in new regime, standard deduction will be allowed, only the other will not be allowed. So please be very careful. This is also an amendment. Next, if you have any interest on self-occupied property, it will not be allowed, because there you are not showing income, but interest on LOP, DLOP is allowed. Next, additional depreciation will not be allowed, but of course, normal depreciation can be taken. This you can cancel if you want, because this was in income tax only till the year 1920. That way, this point is now deleted from income tax law only. So you can cancel if you want. Anybody in the business of tea, coffee, rubber, or site restoration, these are two sections which never come. Inter mein they are not in syllabus, and in final also they never ask. But these are two PGBP deductions allowed in the old regime, not allowed in the new regime. Next, under scientific research, there are total 7 parts. Out of those 7, only 35.1.1 and 35.2 are going to be allowed in the new regime. This is revenue expense for own business of scientific research, 35.1.1, and capital expense of own business scientific research, 35.2. Only these two will be allowed. See, this is for companies, 35.2 AB. So in a 115 BSc, we can't talk only about it. But out of the remaining, only these two will be allowed. 35.1.1 and 35.2 means 35.1.2, 35.1.3, 35.1.2A, 35.2AA. All this will not be allowed in the new taxation regime. Next, specified business 100% deduction of capital expenditure, not allowed. 35 CCC agriculture extension project expense. This section is also not there in inter, only in final, not allowed. Next, second amendment. Deduction against family pension, we used to get 1/3 or 15,000, whichever is lower. Only in the old regime, it was not allowed in the new regime, but now this point is removed from here. Matlab, now this is going to be allowed. And now comes the biggest impact of this in your life. Chapter 6A ka deduction is not going to be allowed under the new taxation regime. New taxation regime is not going to allow Chapter 6A ka deduction. Matlab your 80C, 80D, etc. will not be allowed. This makes it clear why auntie cannot make the new taxation regime compulsory. Because if auntie makes the new taxation regime compulsory, that means 80C, 80D deduction will not be allowed. So people will stop taking these policies, because a lot of people take policies not because they want life coverage, because they want tax benefit. And if people stop taking these policies because auntie is making it compulsory, then the stocks of these insurance companies will crash. And if these insurance companies ka stocks crash, the whole economy will crash, because these insurers are one of the biggest investors of the stock markets. There is a ripple effect that will come. That's the macroeconomic part, the higher impact that you have to understand. Any student who has attended my lectures knows one thing for sure, that I consider exam as a byproduct. Yes, it is important, but we are here for knowledge purposes. If our knowledge is clear, then we can answer anything in exam and anything in interview. But if we study the law only for learning, for exam purposes, we may not be able to do justice to the exam also. Forget about our interviews and forget about our career. So understand why new regime cannot be compulsory, despite the fact that our government, and I also want it to be compulsory, bloody hell, 30% of the portion will get again. So chapter 6 deduction will not be allowed, but following will be allowed. Employer contribution to RPF, NPS, sorry. Pay attention, only subsection 2. Matlab own contribution, subsection 1, 1B will not be allowed. 80 double J double A. This 80 double J double A comes in every paper of CA final and almost every paper of CA enter. 30% of your additional employee cost. That will be allowed in old as well as new. 80 CCD2 will be allowed in old as well as new. 80 LA is only in CA final. Deduction for international financial services center. 10 consecutive years out of first 15 years, 100% of the profit allowed in old as well as new. And there is a new section 80 CCH in income tax law, under which subsection 1 is own contribution to Agniveer fund. We have Agniveers under the Agnipath scheme of the government, where youth will be recruited in the armed forces for 4 years. During those 4 years, we will give you salary. From that salary, you can make contribution to your Agniveer corpus fund, and government will make extra contribution, just like we do in NPS. Here also, government will do contribution in 80CCI subsection 2. So, own contribution ka deduction you get in subsection 1, and employer contribution ka deduction you get in subsection 2. So, employer contribution ka deduction you will get in old as well as new. This is exactly same as NPS. That own contribution ka deduction you will not get, only subsection 2 you will get, and own contribution here also you will not get, only employer contribution subsection. Matlab subsection 1 ka own contribution you will not get deduction, old mein you will get, not in new. And subsection 2 ka employer contribution deduction you will get in old as well as new. Next, with respect to all the deductions that you have foregone, if there is any loss or unabsorbed depreciation, that will also not be allowed. If you have house property loss, can house property loss be adjusted against other heads of income? Maximum 2 lakh, but yes, we can adjust, but only in the old regime, not allowed in the new regime. And if there is any exemption of any allowance or perquisite, not in income tax, but in any other law, so that will also not. Ladies and gentlemen, I told you some time back that if new taxation regime has to be beneficial, the highest benefit that it can bring about is 1,12,500. But if it is prejudicial, the loss is enormous, infinite. It cannot even be measured in money. The deductions and exemptions that you are foregoing can be worth crores of rupees. So stop even thinking about. Chapter 6 alone will meet up for the difference. Forget about it. Don't even think about the new taxation regime. Let's go to the next assessing. Cooperative society. Old regime is very simple and no amendment. First 10,000, 10%. Next 10,000 is 20. So you can take either ka 1,000, no, 10 ka 10%. And then plus 20% of the remaining other 10, 10,000 to 20,000. And after 20, it will be this 3,000. How 3,000? 10,000 ka 10%, 1,000, 10,000 ka 20%, 2,000. So till 20,000, we have 3,000. And remaining ke upar we will apply 30%. Surcharge, if income exceeds 1 crore. So individual HUF ke liye surcharge comes when income exceeds 50 lakhs. But for cooperative society, after 1 crore, 7%, and after 10 crore, 12%. So no amendment. 0 to 1 crore, nothing more than 1 crore, 7%, and more than 10 crore, 12%. So here that 10, 15, 25, 37 is not applicable. And HEC, very easy, like it is for everyone. Next, cooperative societies also have a new taxation regime. Till existingly till last year, the section was 115BAD only. Now we also have 115BAE. So the cooperative society which will come in BAD is the one which has not gone in BAA. Sir, what is this BAE? For all those students who have learned the difference between BAA and BAB, that is domestic companies ka two sections. What is BAB? Newly incorporated company in the business of manufacturing. Lots and lots of conditions. So BAA mein we were applying 22 plus 10 plus 4, making it 25.168. But for new manufacturing companies, it was 15 plus 10 plus 4, 17.16. मतलब in companies, manufacturing organizations are getting benefit. So exact lines of 115BAB, we are now having BAE. So for cooperative society, from now onwards, we will have two sections of new taxation regime: 115BAD, 115BAE. Just like for companies, we have two. Which are the two sections for companies? 115BAA, 115BAB. For companies, we have two. Likewise, for cooperative societies also, we will be having two. 115BAA, BAB are for companies, and now we will have BAD and BAE. Sir, students tend to think that these two are for companies, so they are similar, and these two are for cooperative society, so they are similar. But to be very honest, these two sections have more similarities. New manufacturing company, new manufacturing cooperative society. Their rates are same. In fact, these two sections have same rates. All the conditions applicable here are same. The disqualified businesses, the other conditions, etc. Everything is same. BAE is introduced only in the lines of BAB. So first we'll talk about BAD, which is non-manufacturing or old manufacturing organizations. Basic rate of 22. Surcharge is always 10%. Here it is always going to be applicable. Always 10%. It will not depend on your income. Even if your income is 1 rupee, it will apply. And 4%, making the effective tax rate as 25.168%. 25.168. But special rate is going to be applicable because this is only your normal income ka tax. Special rate will always apply. Old regime or new regime, we segregate. Special income, special rate, and normal income pay we decide old or new. And there will be no alternate minimum tax. For option exercising for the other assessees other than individual, it is always going to be very easy. You have to, by the way, here the by default regime is old. Every section of new regime by default it was old only. Only in BSc they have made new the default regime as per amendment. Otherwise, by default you are in old. You can exercise the option and go to new, but once exercise cannot change. This is very simple and there is no amendment also. By default you are in old. If you want new, decide before due date of written filing. And once you go to new, you will forever remain in new. Then you don't have the option of coming back to the old. Tax benefits to be foregone are on similar lines. SEZ, additional depreciation. This you can remove because after 1920 it is gone. These two are PGBP deduction. Same, scientific research related, all will not be allowed. Only these two. Revenue expense on business, capital expense on business will be allowed. Specified business ka deduction, not allowed. Agriculture extension, not allowed. Chapter 6 say, not allowed. Now see, 80 CCD2, CCH2 are for employees. That can only be for individuals. That can't come for cooperative society. So for cooperative society only 80JJAA and 80LA will be allowed, and all losses pertaining to the above will be not allowed. Okay. As far as rates of partnership firms are concerned, we have a separate chapter, so we'll discuss in that. And as far as rates of companies are concerned, for that also we have a separate chapter, so we will discuss in that. So firms and companies we will be discussing in separate chapter. Some more tweets of that day. If you want, main tweet is this, you can read. Finally, married people take a break. Only tax regime gives you two options, that is old and new. The spouse under both circumstances remains same. So you don't have anything to celebrate or think about. By the way, this has made me a Modi ji fan. Earlier I was fan, but in between, I was a little upset with a few things. But of late, I am very, very happy and impressed with Modi ji. Modi ji has basically, as the national leader, he has said that at any stage you can actually, there's no age of falling in love, because Modi ji's Instagram videos, in his voice, all the songs, Zara kabhi मेरी नजर से खुद को देख भी, है चांद में भी दाग पर ना तुझ में एक. So Modi ji has granted this permission, and just in case the melody hashtag takes place, just imagine how many options it will open for all of us. Okay, interfaith marriages. Every Indian household has this old-fashioned father who is against intercaste marriages, who is also a hardcore Modi fan. The moment Modi ji does it, you have a facility. You can go and tell your parents, Papa, your fan has done it. Matlab, your biggest inspiration has done it. Then Papa is a Modi fan. He will allow you. Interfaith marriages, it will be allowed. At any stage of your life, you want to fall in love, it will be allowed. So I am only 35. It will be allowed. So many options have been opened. Okay. But as of now, married man, control yourself. Okay. Ladies and gentlemen, I already told you about the introduction of BAE. We already had BAB. Now, just let me tell you, 115 BAA and BAB, already I have told you, 115 BAA and BAB were introduced simultaneously, 25.168 and 17.16, which we will discuss in companies ka chapter, and specifically for newly incorporated manufacturing companies, we had this concessional tax. But cooperative society only BAD was in. Okay, so there are cooperative societies who are in manufacturing business. So VAE is being introduced as the same line. All conditions are same with little changes. One change is that this is newly incorporated manufacturing company. This was introduced in 2019. So newly incorporated means on or after 1st October 19. The allowed date for incorporating this was on or after 1/10/19. But the BAE is introduced from the present budget. No. So here the newly incorporated cooperative society will mean any cooperative society that has incorporated from this date onwards. So for company, the effective date of incorporation is this, but for society it is this. Here chapter 6 में only 80JJAA is going to be allowed. There will not be any other deduction. And in 115 BAB, there was a restriction that you should not be using any building which was earlier used as a hotel or convention center. But in BAE, there is no such condition. Anyways, to be very honest, in BAB, the line that they have written is illogical. It has got nothing, it is of no use. It is an illogical line in any case. So you can ignore that line any which way if you want. That, ladies and gentlemen, is our first chapter. We have companies and firms ka tax rates that we will discuss in that chapter. We have a specific dedicated chapter for companies and firms in our CA final book. But as of now, we get done with our first chapter, tax rates introduction, which is also applicable obviously to intermediate students. Next chapter, double taxation relief, is applicable only to CA final students. So we'll go to the second chapter. We will preferably keep the duration of every revision lecture between 1 hour 15 minutes and 1 hour 30 minutes. We will try to not cross 1 hour 30 minutes, and we will stay somewhere between 1 hour 15 and 1 hour 30 minutes. And in about 10-11 lectures, I will try to complete your revision, all the chapters, but only the first episode on YouTube, everything else on SS Pro Educare, empowering the pro in you. One-to-one mentorship in commerce from 11th standard to professional degree if you are stuck in commerce. You are a chartered accountant and you have 10 years practicing or working, you are 10 years into your profession after becoming CA, but unhappy. I even today get cases where there is someone who became a chartered accountant 10 years ago, but unhappy with the work he is doing, he is looking for a career change. I mentor those people also. Forget about mentoring students. Anybody can mentor students because students are, they are like clay. You can mold them the way you want. I am capable of molding people who have practiced for 10 years and make them change their profession. So one-to-one mentorship in commerce, not just for students, but in fact also for practicing professionals. I actually get them jobs if they are not getting proper job. Okay? So ladies and gentlemen, we go to the second chapter, double taxation avoidance agreement. Agreements are also known as treaty and convention. Very, very important. Globally, there are two principles of levy of tax: principle of residence and principle of source. If you are a resident of any country, that country will consider you as that will be your home country, and you will be paying tax in the country of residence on your global income, world income. And if you are deriving income from a particular country, that country will be called your host country and will apply the principle of source. The country of residence will tax you on your world income, and the country of source will tax you on that country's income. Resultingly, if a person is resident of one country and has income in another country, resident in one country, income in another country, then that person will have to pay tax in both countries. The home country will apply principle of residence. The host country will apply the principle of source, and this will amount to result in double taxation. Double taxation type 1 is juridical double taxation. The definition being, same person on the same income is getting taxed twice. When the same person on the same income is getting taxed twice, that will amount to juridical double taxation. For example, a person who is resident in India derives income in New Zealand. India is of rupees 100. India is levying tax of 30 and New Zealand is levying tax of 40. So this same person is paying both taxes. This 30 and this 40 is being paid by the same person. That is juridical double taxation. Sometimes we also have a concept called economic double taxation, when the same income will be taxed twice. Same income will be taxed twice, but in the hands of different people. The economic double taxation mainly happens in the nature of punishment. Supposingly, one expense is disallowed because violation of cash payment. I have written that example. Expense is disallowed because violation of cash payment rule. But the recipient has to still pay tax. But the payer will not get deduction and pay still has to pay tax. Same amount will get taxed for both. And that is economic double taxation. This chapter is going to grant you relief only and only under juridical double taxation. There is no relief under economic, because one, economic is in the nature of punishment. Two, from your pocket tax has gone only once. See, when will you get relief? If you have paid twice, no, and you pay twice only under juridical. So economic is already first of all brought for punishment purposes. There is not going to be any relief. Double taxation relief will be given only in cases of juridical double taxation. There is no relief in cases of economic double taxation. To protect assessee from genuine hardship in cases of juridical double taxation, there are two ways in which relief can be provided. One, bilateral relief. When both governments cooperate with each other and enter into a treaty, agreement or convention, then that is called bilateral. When we are friends, Wah Modi ji wah. So it is going to be a treaty between two governments and therefore it will be bilateral. But when he is lonely, I am so lonely, so only government of India will come forward to give you relief. If there is non-cooperation between the two countries and they do not enter into a double taxation avoidance agreement, then there will be only relief provided by government of India under section 91, which is unilateral relief. A double taxation avoidance agreement ka meaning is written in simple language: when two countries enter into an agreement between the two countries, and two countries enter into an agreement with each other to provide relief to the assessee from double taxation, that will be called a double taxation avoidance agreement. When we enter into a treaty, so we are going to provide bilateral relief. Bilateral means both governments will together provide relief. What are the two ways in which bilateral relief can be provided? First, tax credit method, where both countries will charge tax, but one will give credit of what you have paid in the other. Country A will take tax, but minus what you have paid in country B. But country B will also take. And under tax exemption method, one of the countries will take, another will not take anything at all. For example, India, New Zealand. If New Zealand takes tax but gives credit of what you paid in India, so New Zealand will take effectively only 10, and India will also take. But if it is tax exemption, then one of the countries will take, another will leave all together. There are the two methods of providing bilateral relief: tax credit and tax exemption. Very important, if the normal provisions of income tax law are more beneficial, then you can take for normal. In other words, DTAA is optional. Any assessee will pay tax as per the DTAA rates or as per the income tax rates, whichever is beneficial. We can enter into an agreement with specified association also. For example, we can have an agreement between ICAI and American Institute of Certified Public Accountants. That can also be an agreement of understanding, that can be MOUs that can be entered into. In fact, there are some countries which are non-sovereign. Non-sovereign means even today there is kingdom. It is not run by the public, it is run by their kingdom, the Sheikh, Dubai ka Sheikh. We can enter into something called tax information exchange agreement with such countries also. Misuse prevention, when a third country ka resident is purposely taking benefit of any of the two countries. For example, there is an agreement between India and Germany. So obviously Indians and Germans will get benefit. An Australian is taking an office in rent in some village of India and always keeping it locked. So sir, why he took it? So that he has address proof of India. And because he has address proof of India, he is trying to avail the benefit of India-Germany treaty, because there is no treaty between Australia and Germany. Example. So third country ka resident is purposely taking benefit. That is called misuse. We will not let that happen. Assessing officer's duty is to investigate whether the assessee genuinely belongs to one of the two countries. If you want to claim the DTAA ka relief under bilateral, if you are non-resident here, that means you are resident in some other country. In that country, you have paid tax and you want to get the relief here. So from that country, you will have to bring something called the tax residency certificate. Only and only if you bring the tax residency certificate, you will be eligible for DTAA relief. Next, every treaty will have something called a non-discrimination clause, wherein we will promise that tax on foreign assessees will not be less favorable compared to domestic assessee. मतलब foreign assessee का tax will be not more than our assessee ka tax. In other words, Germany and India are promising each other, we will not tax your people more than our people. We will not tax your people more than our people. We will not discriminate against your people, but we clarify that we will be allowed to take higher rate from foreign company का tax in India is 40% higher. That is allowed. मतलब non discrimination का benefit will be available only and only to non corporate assessees. Is that clear? This brings us to the second part. Let me be very honest with you. Exam में you expect question of this, that is unilateral relief, because bilateral relief का calculation depends on treaty and the treaties are not a part of our syllabus. Only general points are. But unilateral relief का calculation is given nowhere else but the Income Tax Act, and unilateral relief का calculation is what has been asked in maximum exams. So you will get unilateral relief if you follow the following conditions, fulfill the following condition. Main condition, deciding condition, every other condition is time pass. Main condition is that unilateral relief will be available only if you are a resident of our country. We are not going to give any unilateral relief to non-residents. So you have income outside India, in that country you have paid tax. This will result in double taxation, no? Because India will levy tax due to residence. That country has levied tax due to source, and there is no DTAA between India and that country. Because there is no DTAA, bilateral is not allowed. Matlab, listen. You have income outside India and you have paid tax there. That means there is double taxation. There is no DTAA. That means you can't get bilateral. The now only option is unilateral. If you are resident, we will give. Because resident is bringing foreign money, so we are happy. So what to do? First, compute entity. Entity will include Indian income, foreign income, total income. On that, calculate tax as per Indian applicable. That can be old regime, new regime. And find out average rate of tax. This is the most important step. The total tax upon total income. What? देखो, India में we have slab rates, no? 0, 5, 20, 30, and new regime में 0, 5, 10, 15, 20, 30. Total tax upon total income means on your income, if you apply that rate directly, you will get your tax slab. Convert your slab rate into flat rate. Understand like this. Total tax upon total income. Total tax upon total income. Convert your slab rate into flat. That will give you your average rate of tax, and this you will compare with the foreign rate, which will be given to you in the country at Indian rate or foreign rate, Indian average rate and foreign given rate, Indian or foreign, whichever is lower, you will get relief under section 91. Indian rate or foreign rate, whichever is lower, will be applied, but only and only on your doubly taxed income. Doubly taxed income included in NTTI, us pe we will apply at the Indian rate or foreign rate, whichever is lower. Is that clear? To give you a small example, supposing your Indian income is 8 lakh, foreign income is 7 lakh. Foreign income is in a country where there is no DTAA, and that country may we have paid 20%. First of all, is there double taxation? Yes, because there is foreign income on which we are paying tax in India because we are resident. So there is double tax and there is no DTAA. That means we will not get any bilateral relief. So our only option is unilateral. First, take total income. Indian, foreign, total 15 lakh. Calculate tax liability. I am doing it as per new regime because deduction exemption not given. If deduction exemption is not given, then if the income is same, then new regime. So 1 lakh 9, you can do 1 lakh 50,000. You will do 4% is what you will add. I believe there is some printing error here. This won't be 1 lakh 95. This is as per last year's calculation. This will be 1 lakh 56,000. Apologies for the error. Kindly make this correction. Average rate of tax will not be 13. It will be 10.4%. Okay. So 1 lakh 56,000. As of now, 15 lakh ke upar we directly get 150 and plus 4% 156. That's 10.4%. Foreign rate is 20. This also needs to be corrected. So this becomes 10.4%. And doubly tax income included in NTA. How much is the doubly tax income? 7 lakh. On that we will apply 10.4%. That is the lower. So this will be 156. This will be 10.4. Lower rate will be 10.4. 7 lakh pe you will apply 10.4%, and that 10.4% of 7 lakh you will subtract. This is going to be 1 lakh 56,000 minus, I think it is 70 to 800. 7 lakh ka 10.4%. So your relief, let me tell you the corrections. Okay. I apologize for the error, just that the calculation is not as per the amendment. So on 15 lakh, you will not get 1 lakh 95,000, you will get 1 lakh 56,000, 150 plus cess. So your average rate of tax will become 10.4%. Foreign rate is 20 as given in the question. So lower of the two rate will be 10.4%. Doubly tax income on which you will get relief is 7 lakh, but not at 13%, but at 10.4%, which will make it a relief of 72,800 from 1,56,000 cut tax. You will subtract 72,800, so you will get your final tax liability. Indian tax or foreign tax, whichever is lower. At that rate, you apply on your doubly tax income included in NTTI. Whichever is lower coupon, you will get your benefit, and that is your calculation under section 91. And that, ladies and gentlemen, is your chapter double taxation relief. Kindly make the correction, and here I think 83,200 something you'll get. You please make this correction. Apologies for the error. Let's go ahead. Next chapter that we have is a chapter called mode of acceptance and repayment of loan. Whenever people were caught holding huge amounts of cash, they were declaring it as loan and avoiding tax, interest, penalty, everything. So section 269 SS was enacted to tell you that no person shall take or accept, means taking is prohibited, what, any loan, advance or deposit other than the three allowable modes. Throughout the syllabus, we have these three modes: account pay check, account pay draft, electronic mode. That means if you want to take a loan, advance or deposit, you can take to the three allowable modes. If the amount of loan, or if there is any existing taken from the same party, you have taken any past loan, if the total is 20,000 or more, the existing balance may be taken in any mode. Existing balance may be taken in check also, but if the total is touching 20, exact 20, then you have to take it to the three allowable modes. If you want to take loan from any party, and from that party your total is touching 20, considering any past loans taken irrespective of their mode, if past amount plus present amount total is touching 20, then you have to take it in three allowable modes. However, this section is not applicable on transactions done with government, government company, statutory corporation, bank, any other notified institute, or if the lender and borrower are both farmers having no other income. If you take the loan, then you will be having 100% penalty of the amount of loan taken or accepted, and the person who has taken the loan will have to pay that penalty. Okay, this, if there is reasonable cause, there will be no penalty. Section 273B, very important case law, Kumari AB Shanti, Supreme Court said that if there is reasonable cause, there will be no penalty. If there are short-term transaction between sister concern, no penalty. If you do transaction through bank transfer voucher, it is not account pay check, account pay draft or electronic mode, but it is still through banking channel. So we are going to allow that. Transaction between firm and partner, we will not consider it as loan. If there is genuine transaction, penalty will not be levied. Contribution towards share capital is not loan, advance, deposit. No penalty will be levied. As per Rajasthan High Court, if a person takes 50,000 loan, then we should apply penalty of only 30,000. We said 100%. So Rajasthan High Court said apply on the excess over. But ICAI does not follow. ICAI levies full 100% penalty. Supposingly you take 50,000 cash loan, then 50,000. If you take 20,000, exact 20 is also violation, then 20,000. This is why Rajasthan High Court is wrong, because at 20,000 as per Rajasthan High Court, penalty will be 0. The AO can either invoke cash loan penalty or consider it as unexplained cash credit. He cannot apply both. He can levy only one of the two penalties. Second, no person shall repay. So you've taken through allowed modes, now repay also through allowed modes. Repay the loan, advance, deposit only through the three allowable modes if the amount before repayment is 20,000 or more. If the amount before repayment is 20,000 or more, then you have to repay also in the three allowable modes. Contravention will result in same 100% penalty on the amount that is repaid in violation of 269 ST, but there will be no cumulative penalty. If at the time of taking the loan you have paid the penalty, then at the time of repayment of loan you will not be paying the penalty again. One small amendment has taken place. We have 20,000 limit in both 269 SS as well as 269 T for loan, advance, deposit. This will make, we will make 2 lakh. It won't be penalty at 20,000, it will be penalty at 2 lakh for any deposit accepted by a primary agriculture credit society, PACS, or a primary cooperative agriculture and rural development bank, PACAD, PACS or PACAD, from its member, or a loan given by them to them. So there are credit societies, cooperative society, primary agriculture credit society and primary cooperative agriculture and rural development bank. They have their members. Now, whenever these members have spare funds, it's like a cooperative bank. So what do members do? They deposit their money with these cooperative society because they feel here it is safe, and they give loans also. It's like a cooperative bank. So there are 10 members, all farmers, agriculture related. Farmers have spare funds, so they deposit here. Other farmers have lack of funds, so they give loans. So on the loans, these organizations will earn incomes and they will pay interest on the deposit of their members. It is like mutual money is helping each other at times of need. We are working as a bank. So if there are deposits given by members to these societies or loans given by societies to these members or repayment of that deposit or the loan, मतलब member का deposit being repaid or society का loan being repaid, all these transactions the limit will enhance to 2 lakh rupees. The normal limit of 20,000 is not going to be applicable. The limit that will be applicable will be 2 lakh in the case of these transactions. Otherwise, 269 SS and 269P will have 20,000 limit. So, ladies and gentlemen, that was the third chapter, and as promised that we will keep the duration between 1 hour 15 minutes and 1 hour 20 minutes. So, we cannot be starting the next chapter. Now, to summarize, in today's lecture, we have completed for CA final introduction, double taxation relief and cash loans. In that, for CA inter students, the introduction chapter where we did all the tax rates, only that part is relevant. In the next lecture, I will be doing NRI taxation of CA final, but that contains residential status, which is applicable for CA inter, and your capital gains part, which is applicable for CA inter. So next lecture we will keep, but now today's lecture, the only relevant part for CA inter students was the tax rate part. Next episode will be only and only on SS Pro Educare app, nowhere else. Have a nice day. Thank you very much.